Hello everyone, welcome to Trade. Today we're just going to be seeing intraday trading with CPR, few logics and few setups. So we'll just wait for about a minute. I see about 5 viewers. If my audio is clear, if you can just message yes, the audio is clear, that would be helpful to continue. So if anybody in the chat can just mention that the audio is clear, that would be helpful. Okay, thank you. Okay, now we're going to start off with the CPR indicator. First, I'll just explain the 4 setups that we can use most widely in. First, I'll just explain the 4 setups that we can widely use in our intraday, and then probably do some back testing with putting on the CPR and with the price action. For now, I'll just hide the price action and the CPR. See, these are the 4 setups that I'll be explaining again today based on the CPR. Okay, the first one is R1 previous day high reversal. We'll straight away go into the chart. This is just, I've drawn this CPR levels for explanation. See, this is how the CPR indicator will be. It's nothing but just pivots. It is derived from based on the previous price action support and resistance, where in between you will have the CPR, that is the top CPR, pivot and bottom CPR. Then you might have previous day high. That depends wherever it comes, right? Previous day high can come in between R1 and R2 also. So this PHD, what I refer, will be the previous day high. Then you have the resistance 1, resistance 2 and resistance 3. And on the bottom side, you'll have support 1, support 2 and support 3. So these levels are pretty important for intraday trading, especially the previous day high R1, the CPR and previous day low S1. We'll be explaining the logics and showing you some beautiful examples how we could have traded based on just this and the CPR indicator. I'll be showing you how to add the CPR indicator as well, R indicator or any other indicator. So the first setup that we're going to look at is this. Okay, that is R1 previous day high reversal. So what it states is, if the price opens between the CPR and R1 previous day high, the price can take resistance at R1 or the previous day high and reverse back to the CPR. Okay, so I'm just going to show exactly what it states, the first setup that we are looking at. See, what it states is the price, the opening price, right, at 9:15 when the candle opens, if it opens between the previous day high and CPR, or between the R1 and CPR, if it opens somewhere in this region, okay, most likely the price will go up, take resistance either at the previous day high or resistance at R1. We won't be able to tell on where it takes resistance, either at the R1 or the previous day high. It can take resistance at either one, the previous day high or the R1, and then reverse back to the CPR quickly. Fine. See, one additional point in this setup is this first setup, that what I explained. This reversal, right, when the price does open between the CPR and the previous day high, most likely this move will be a very quick move in the morning. I'll be showing you some examples as well, and that can be a very good scalp. See, this happens within 10 o'clock or 10:15 in the market. We might get an entry around 9:30, and within 10:30 or 11 the trade will be done. That is, if the price opens between the CPR and the previous day high, most likely will go up, take resistance at R1 or take resistance at the previous day and get a quick dip until CPR. And the moment the price hits CPR, right, we need to book our profits. See, after explaining all the four logics, I'll be even explaining what strike price to choose and how to place a stop loss in option buying as well. First, let me just explain all the four logics. And where it will hit, see, the CPR consists of three lines, the top, the TC, pivot, and BC. So we cannot tell which line it will hit for sure. It can even hit the top line and bounce, or it can even hit the pivot and bounce. It can even hit the bottom CPR and bounce. So the moment we hit the CPR, that's when we have to exit this kind of a short trade in this first setup. See, and coming to the second setup, we have a breakout setup, that is if R1 or the previous day high breaks out. So if the price breaks R1 or the previous day high, the price can reach R2 of CPR or 50% of R1 and R2. So what this means is, now let the price open anywhere. It can open at the CPR or it can open anywhere below. If the price breaks this previous day high and R1, most likely will hit R2 or 50% of R1 and R2. Now how we can find out the exact 50%? We can make use of this Fibonacci tool, which is available here. Just choose the Fib retracement, place it from R1 to R2, and you can place a line exactly at the 50% right now. It's crumpled, yeah. You can place a line exactly that can be our first target. See, in my example, what I've chosen, the lines that I've drawn is small, but we'll be seeing some examples where the distance between R1 and R2 will be huge. So that time taking profits at the 50% of R1 and R2 is also a good thing. So I'll just explain the second setup that we are seeing, that is if the price breaks previous day high and R1, right, most likely will hit R2 or 50% of R1 and R2. See, first I'll explain all these four logics, then we will be seeing some examples in the real-time chart, and I'll be explaining more about the entry and exit, how to place stop loss and all that, how I do it. So as of now, before I go to the, the two logics on the lower side, the two setup, I'll just explain this again. The first setup is if the price opens here, right, between CPR and the previous day high. See, when we say it'll hit the previous day high or R1, see, a lot of time it's not necessary, it'll just do a pinpoint touch and fall. It can go in this range, go little above previous day high and then fall, or go to R1, go little above the R1 level and then fall. So we'll be taking into consideration other things, how to determine whether it's going to reverse or a breakout. Even that will be explained. Now the fourth setup that I have is if the price opens between the CPR and S1 or the previous day low, the price can take support at S1 and the previous day low and reverse back to the CPR. This is kind of opposite of the first setup that we saw, that is sorry. So this is the CPR, right? If the price opens between CPR and the previous day low and S1, the price can take, it will come down, the price can most likely take support at the previous day low or S1 and reverse back to the CPR. Again, this reversal trade, when we open in the morning, it will be a very quick trade. So probably if we get an entry around 9:40, 9:30, within half an hour this trade will be completed. Sometimes even in 1 15-minute candle it will be completed, which is pretty good for scalping. And not necessarily that once the price opens, take support at S1 or the previous day low and reverse to CPR, it will stop at CPR. There is, if it's a nice bullish day, it can even break out of the CPR and go higher. Right, we'll be seeing those examples as well. And after everything is done, I'm okay to take few questions on the chart as well. And the fourth setup that we have is if the price breaks S1, that is support one, or the previous day low, the price can reach S2 of CPR or 50% of S1 and S2. That's again opposite of the second setup that we saw. That is nothing but if the previous day low and S1 breaks, right, most likely we will hit S2, or if the gap is too wide, we might even keep a target at 50% of S1 and S2. Fine. So these are the four setups that I just explained. And see, before we see examples, I'll just tell one more important point. That is, see, whenever the previous day low, now say the market opens, that is apart from all this four setup that I explained, okay. See, whenever we say we don't get an opening between the CPR and the previous day low, we get a huge gap down somewhere close to S2 or S1 in this region. If we open here, and whenever the previous day low breaks on the upper side, right, when the price comes like this and breaks this previous day low, most likely we will hit the CPR. So once this previous day low breaks, we can take an entry and be sure that we will hit the CPR level. And the same thing from the previous day high. See, now say the market gets a huge gap up somewhere around R3 or R2, right? And we open somewhere over here and the price starts coming down. So we still need a solid confirmation to short, or you're just waiting for that one nice entry, a scalping entry where you can enter and exit in few minutes. The moment this previous day high breaks, right, on the lower side, see the market has opened here and we are coming down. The moment this previous day high breaks, right, most likely we will hit the CPR. Once we hit the CPR, we can just keep trailing stop loss. There's a chance that we can even break CPR and go down. And the other thing is, whenever the price, this break of CPR, or see the market opens at 9:15, right? Whenever we open between the CPR and the previous day high at about 9:15, most likely this reversal from R1, it'll go up, take resistance at the previous day high or R1 and come back to the CPR. This will be a very quick trade. And the same thing on the bottom side. If we open between the CPR and the previous day low and S1, most likely will come down, take support and get a quick reversal. Then we might be sideways and a trade might come later on around like say 12 or so. But this reversal trades will be pretty quick. I'll be showing you some examples. Okay, before we see examples, see these are the most important candlesticks that we will look for at the pivot levels. I'll just go through them. I have a complete video, you can watch it. That is candlestick pattern for beginners, and some of the most important candles are this. The bearish candles are this inverted hammer, it will look like this. A solid red candle, evening star, a bearish engulf, or this kind of a inverted hammer like a doji, right, inverted doji. And the neutral patterns are doji and this kind of a high wave candle where the body will be very thin and the wicks will be large. And some of the bullish candles are this hammer where you'll have a body and a wick. Then you will have a solid green candle. This is called as a morning star, where you have a red, a small doji, and a green candle is called a morning star, and a bullish engulf and a bullish doji. So these are some of the most important candles that we will look for. Now where we will look for is, see, in the four setups that I mentioned, right, these are the four setups. You can even like take a screenshot or something just to like go through it. See, the first setup that we saw, I mentioned if the price opens here, we can take a reversal at the previous day high or R1. Now, what are the things that we see for reversal? One is we need to see if there is a nice bearish candle that is formed. Either it should be one of these candles, either a bearish like an inverted hammer or a solid red candle or an evening star or a bearish engulf. So we have to see if that candle comes on a 5-minute or a 15-minute chart, right? And along with that, if we can, see some kind of a bearish divergence, right? Now, what is bearish divergence? I'll explain that after just telling you about these candles. So we'll have to look for this in bearish candle for this kind of a reversal from here at R1 or the previous day high. And look for a bullish, in case this R1 breaks, right, with a nice bullish candle, then we will have to look for this kind of a solid green bullish candle breaking this R1. Then there is most likely a chance that we will hit R2. And the same thing on the downside. Now, I did mention that the price can come down and reverse from S1 or the previous day low and hit the CPR, right? So at this point of reversal, we look for this kind of a bullish candle. Either we get a hammer or a solid green candle, a morning star, or kind of a bullish engulf. Most likely, and hammer will be a very good chart pattern, or this kind of a morning star that comes is a very good candlestick pattern, where we will be looking at the previous day low or support to buy. See, along with the candlestick pattern, we also need to see the divergence. Now, what is this divergence is? See, this is the divergence chart that I have, the bullish divergence, bearish divergence, hidden bullish divergence, and bearish divergence. So first we'll see the bearish divergence. If the price makes higher high and the oscillator makes a lower low, it is called a bearish divergence, and most likely the price might reverse on the downside. So where we will look for this is whenever the first setup is in play, that is our first setup, what I mentioned, right? This one, if the price opens between CPR and R1, the price can take resistance at R1 previous day high and reverse back to CPR. So when the price opens here and say the price goes up, right, and you're seeing a bearish candle rejecting this R1 and you're expecting a dip until the CPR. In this case, this is the time when you see this. Along with the candlestick pattern, we can also see if we find this kind of a bearish divergence, either this or the hidden bearish divergence. The bearish divergence is nothing but the price should make higher high, the oscillator should make low low. Oscillator is nothing but RSI. And hidden bearish divergence is again the price making a lower high and the oscillator is making a higher high. So we'll have to see if this kind of divergence comes over here when the price comes at R1. If we find if the candlestick pattern gives us a bearish candlestick pattern plus the divergence is also there, then most likely the market will dip and hit the CPR. Now the same thing, we'll see the bullish divergence. Now what is this bullish divergence is? If the price is making a lower low, and I'll be showing you these examples when we are seeing the charts. The bullish divergence is, see, when the price is making a lower low, oscillator is making a higher high, that is RSI making a higher high, then we say it is bullish divergence. Hidden bullish divergence is when the price is making a higher high and oscillator is making a lower low, right? So if somebody is very new to trading, it might be a little difficult to spot this immediately. It will take some practice, a lot of back testing is required. but you can kind of save this chart or just type in Google divergence. You'll get the chart, take a printout, keep it next to you, so it'll be easy to find. And the other important point in this divergence is, if you find divergence on a 15-minute time frame, it is more stronger than a 5-minute time frame. See, even if you find divergence on a 5-minute time frame, it will work, but it will be slightly weaker. But if you find a divergence on a 15-minute time frame, it will be more stronger. When I say weak is, say the market is going up, okay? Now you find, let's leave the pivot for some time. Say the market is going up, you're finding a divergence on 5 minutes. So all the dip that you might get might just be a small dip, right? And again, the market might go up. But if you find divergence on the 15-minute time frame, it'll be a stronger fall, right? So that is something to keep a note on. So for this third and fourth setup that we saw, if we are seeing, if the price opens here, it comes down, takes support at S1, and we are going up. So at this point, we will look for bullish candle, and if there is a bullish divergence. If there is a bullish candle plus a nice bullish divergence, then most likely this reversal trade will work from S1 or the previous day low until CPR. Now, before we see the few examples on the chart setup, what I'll do is just re-explain this bullish and the bearish divergence. So this is the RSI, okay? It's not there because there's no price action here. We'll be seeing the examples. Now what it means, the bearish divergence, what it says is, see, the price keeps going high, right? It makes one high, comes down, then again it makes a higher high, then it comes down again. So we, in the price, we see two like a higher high. But what happens in the oscillator, in the RSI is, the RSI will go up, come down, and in this up move, the RSI will just make a lower high and come down. We will see the RSI making a lower high. This is bearish divergence. I'll be showing you these examples on the chart as well. So this is how we identify the bearish divergence. And the same thing on the bullish side, when we look for a bullish divergence is, when the market has fallen, you're expecting a reversal at some pivot or a support. So this is when we see if there is a bullish divergence, right? So what bullish divergence states is, the price is making a lower low, but the indicator oscillator is making a higher high. So what happens in this case is, the price comes, makes a new low, comes up, makes another new low, goes up. So we do have some kind of a prices will be making a lower low, but at the same time the oscillator will be making a higher high, right? So this is what we refer as bullish divergence. Obviously it will take some time identifying this in the live market. So always look for the bearish divergence at a very good resistance, and the bullish divergence at a good support. Like, see now, for example, I'll just put on the price action and stuff. See, like, when there is no support or resistance in between, right, you should not be looking at a bullish divergence or a bearish divergence. When the price makes that high, that is when you look for at a good resistance, you look for a bearish divergence. Sorry, and the same thing on the lower side. When the price makes that new low and we hit a good support, That is when you see if there is any kind of a bullish divergence for the upside. So now we will just see some examples of all the setups that I've seen, all the setups that I explained based on the CPR. We'll do some back testing, and today I'm going to be doing back testing until April 1st, okay, and show you from April 1st until now, if we had just traded only on the CPR logic that I had mentioned, right, how many trades we could have got. I'll be explaining that. See, now what I've enabled is the 15, let me go to a 5-minute chart. I'm on a 5-minute Banknifty chart, and I've enabled the historical CPR, right? See, now how you can get the CPR indicator is just go to this indicator and type in CPR. You have like thousands of CPR indicators. You can choose any one and adjust it as per your needs. If you need this particular indicator, what I'm using, this is a custom indicator that I've just done it for myself for ease of use. If you need this, it is for free. There is no charge or anything. You can get it for free, but all that you have to do is just open a trading account in UPSTOX and trade with it. The UPSTOX platform, which is pretty good. You just have to open a trading account there and trade with it. The link for opening the account is mentioned in the below description. So you open an account, trade in it, and just ping me on Instagram that you have whatever, like open the account and stuff, then you will get access to this. This does not just give only the historical or daily CPR. We also have Cambrilla pivot, Bollinger Band. We have the moving averages, and we also have the monthly and the weekly pivots. So today we'll be only seeing the daily pivots. We won't be seeing anything with the moving averages. That's again a completely different setup. So what I've enabled is the historical CPR, so I can use it for back testing. If I don't want, I can just disable it, so the chart will look clean, right? So this is how I've just done my CPR after a lot of research. So right now we'll do some back testing. Okay, now before we proceed with the back testing and showing some example, see right now along with back testing, I'll be explaining the entry and the stop loss as well for the trades. How we could have entered, where we could have placed the stop loss, how to place stop loss even for the quick scalping. So before that, with these 4 setups, if anybody has any question, they can just put it in the chat. I don't mind taking few questions regarding this, or the 4 setups, or anything about the CPR indicator itself. You can post it in the chat. Don't ask about entry, stop loss and all that I'll be explaining now. Okay, if there's no question regarding this setup, we'll go ahead with some back testing. See, this is the Friday price action. We didn't open anywhere. Stop loss placing. Yeah, I'm going to come to that stop loss placing and all that. See, on this Friday, it was basically based on we could have done other trading like scalping and selling options. Many things could be done, but based on this 4 CPR setups that I explained, there was no trade on Friday. See, we could have taken a trade saying that if S2 breaks, we will hit S3 and 50% of S1 and S3. So this was the one good trade, but after such a big gap down, right, it is quite risky, right, to enter a short trade. So basically it was not a very good trading rate based on the CPR, and I don't think any setup would have worked on Friday that would have given us a very good signal, but basically a very sideways day. But this one scalp on the downside was good from S2 until 50% of S1. So we'll just consider this as a no trading day based on CPR. Now to use the previous day, now this is for 5th May, to use the previous day high and to mark the previous day high, I'm going to use a black line for previous day high and previous day low. See what happened on 5th May. So based on this 4 setups that I explained, there was no any good trade, but there was a trade when the moment the CPR broke on the downside. Those are different setups. See, there are about 8 to 9 setups in using CPR. I'm just explaining today only these 4 reversal and the breakout setups. See here on this day, though we opened at the CPR, when this up move came, I was expecting a move probably until the R1 of CPR, but that didn't happen. We got a reversal before that only. It was because of the moving average. So there was a good trading day, but based on the CPR setup, what I'm explaining, it was not a very good day. So I'm considering this as a no trade day. Now coming to 4th May, right? For 4th May, the previous day high was here. We are seeing this. For 4th May, I'll just expand this. For 4th May, the previous day high was this, right? This level of 36,200, and the previous day low was here, correct? So now, one of the setups that I explained, what it states is if the price opens between the previous day high is here. If the price opens between R1 and the CPR and the previous day high, most likely will take a reversal. We took a nice rejection at the previous day high and dipped until CPR. So this was one good trade, a scalping trade until 230 points. So 230 points on the spot chart means on the option premium easily we would have got about 110 or 120 points, right? So this was one good scalp. See, the moment if we hadn't, though we had a big day and it was this news-based day where this RBI interest rates were increased, but this one good scalp based on CPR was worth it. This was one trade that I took, and obviously some scalping over here in the end. The next trade was when the S1 and the previous day low broke. We could have taken a trade until S2, and even S2 broke, we could have taken a trade until S3. See, if somebody had shorted in the morning, okay, and waited until the end, definitely they would have made money. But based on our CPR, what we do is we enter here, we exit, or we can use even trailing stop loss. Now with this made a high, right? So we could have kept the trailing stop loss here, and when it started dipping, we would have definitely been in profit. But when we do scalping, what we do, it's okay to take multiple entries, but see how beautifully this worked. We rejected this previous day high, we hit CPR, and the next best entry was when the S1 and the previous day low broke. See, for this day, May 5th, the previous day low is this, right? 35,627. So see, in this candle it didn't break. It kind of looked like it's breaking. Immediately next candle we reversed, but this was a nice solid break of the previous day low, and we dipped until S2 and S3. So on this candle it was a very good entry. See, based on other CPR setups, there was a good entry here as well, but on the setups that we are seeing, we could have got one entry here and one entry here, and this move would have given us 400 points, means about 230 points on the option premium, which is very good. Now for this trade, that is the first trade, right? how to place a stop loss and how to take an entry. See, sometimes it happens that the stop loss will be wide. Sometimes we'll get a very narrow stop loss, but that is how trading is. If it is a wide stop loss, we will have to take it. We will lose some money. If it is a very narrow stop loss, then that is good for us. So for this trade, the previous day high was here, right? So now where was the rejection candle where we could have entered? Was the first 5-minute candle, was this a good rejection candle? Like I mentioned about the important bearish candle, right? Did we get any of this important candle? No. The second candle, was this a bearish candle or a bullish candle? These were all neutral candles. Neutral candles are where you cannot conclusively decide whether the market is going up or down, right? Here we got one nice red candle, right? Here we got one nice red candle. After 15 minutes, the fourth candle, we got a big red candle. Let me mark that. Okay, so after this red candle comes, now what is the price over here? 36,200. So what we need to do is, if we want to take a trade, now say this red candle came and we are in the assumption that this setup can work, right? The first setup that I explained, that will work. That is price rejecting the previous day high and hitting the CPR. So now we want to take an entry here. So the price is at 36,200. So the entry that we take will be, we will buy put, but not out of the money, in the money. If it is at 36,230, we will buy 36,300 put. Don't buy out of the money put, because if in case it reverses, the rate of loss in the out of the money will be more compared to the in the money. So at this candle, if you're trying to enter, at this candle, what is the price? That is 36,200, right? So we will have to buy a put either 36,300, or we can even go with 36,400. At the max, we can take 36,200 put, because this is very close. Don't go with 36,000 and 36,100. That is, you need a very high conviction for that, and it's not the best way to do it. And the stop loss will be, where is that stop loss thing? Yeah. See, now say after this candle, you take an entry, right? So your stop loss will be high of this candle. You are getting a 98 point stop loss. That is pretty huge. Sorry, this should be here. So we are taking an entry after this. So you're getting a 86 point stop loss. 86 points means the option premium is about 40 points. So if the price reverses back here, you'll be losing about 40 points in your option premium. That is, one lot means we might end up losing even, what do we say, 1,000, right? So but this entry was like that, we can't do anything. The stop loss was here, so we will have to take it. The other type of entries, one is the moment you get this candle, you enter. The next safest way of entering is wait for a retest. Now what is a retest is, say now this is R1, right? Now the price comes at R1, it's taking resistance, and on 5-minute you're waiting for some kind of, you get a nice bearish candle, you're waiting for some kind of, again, a retest of this level, and then you will see if you want to short. But the problem is, sometimes the retest won't come, the fall will come immediately. So in those cases, we can't do anything. We just have to jump in the trade. But always waiting for that, a little pullback or a retest of this level is a good thing. See, on the moment after this candle came, this red candle came, then this green candle came, a nice retest came, and then again this red candle came, right? So if we had waited for that retest and entered on this candle, I'm talking about this red candle now, again we would have entered at the same strike price. That is what, we would have either taken 36,300 put or 36,200 put or 36,400 put, but not 36,000 or 36,100 put, not too much far away from the money. But the best part about this retest is we have a much shorter stop loss. See, on this candle, after this candle, if we had entered, our stop loss was only 36 points. So for one lot in option premium, we would have lost, if it had reversed, we would have lost only about 15 or 20 points, 500 or 600 bucks for one lot, right? And then see the move, how it came until CPR, and this was a good risk to reward ratio, even if we had waited. Now, whether we wait always for a retest or not, that is up to one's choice. See, we got about 225 points down on the downside. See, whether we wait for always for a retest or not, that is one's choice, because not necessarily every time we will get a retest. We can even just could have broken down from this level, right? So that will only come with practice. So when we have on 5-minute chart, when we have this type of a neutral candle, and if something you find that is not right on a 5-minute chart, always shift to a higher time frame for intraday, that is 15-minute. We were checking May 4th, right? So May 4th, see, if we come to a 15-minute candle, this was not a good candle for entry. This was like a high wave. Whenever we have this type of neutral candlestick pattern, right, we shouldn't enter. It's like very indecisive. See, this was not a very good candle. This was not a very good candle. But this 15-minute candle was a very good candle. The third 15-minute. After this, also we could have entered with the high of this candle as stop loss and with the CPR as the target. See, and for exiting a trade, right, now we reversed from the previous day high, we came to the pivot, we hit the pivot. Now, the moment you see when we hit one of the CPR levels or the pivot and the following is a green candle, we could have exited our trade. See, we could have even exited our trade here. I'm sorry, I'm not sure if this marking is clear. Let me use this circle. See, we could have exited our trade here because we got a nice green candle after hitting the CPR, or if somebody had waited, then definitely over here we could have exited. Now for the second entry, where the best second entry came when the previous day low broke, right? See, on this candle it didn't break. The second candle also didn't close below previous day high, previous day low. But this red candle closed below the previous day low. Okay, so and this black line is the previous day low for May 4th. That is this previous day low. So our stop loss now after this black candle, if you end after this red candle, because this is a nice solid red candle, and one of the candlestick pattern that we have is a nice solid red candle, right? So after this candle came, our stop loss would have been the previous day low itself, not the high of this candle. See, whenever we can use any one of these pivot levels as stop loss, we will have to use it. See, in CPR we have these levels, right? R1 previous day high CPR. So whenever we can use this R1 or R2 or the previous day high, previous day low as stop loss, we can and we should. So in this case, our stop loss was the previous day low. Because why previous day low? Because if we go back into the previous day low, right, there's most likely the price will come reverse back to the CPR. So we will not keep high of this candle. We will use the previous day low as stop loss. Target is S2 and S3. And whenever this type of a fall comes, this is See, whenever this type of fall comes at the later part of the market after 230 or so, at this point 255, you have all the pivot levels that is it. Just we should just blindly exit and do not expect the market to break our S3 also and fall, because very less likely the market is going to break S3 on a regular day. We need some kind of a heavy bearish news, like a bad news or something, for trading below S3 or a very big gap down. So in all the 3 days that we saw so far, we got one good entry here, so I'm going to mark it as one. Now on this May 2nd, see, for May 2nd, the previous day low was here, right? And the previous day high is here. See, we had a gap down, but got a nice up move. The entire day we remained sideways. And one of the setups that I mentioned, that if the previous day low breaks on the upper side, right, most likely we will hit the CPR. But this move came at the fag end of the market at about 245. So basically this day was like a no trading day, because even if we had entered, our stop loss would have been hit. Now where we could have entered, see, on after this particular nice bullish candle, right, it broke the previous day low, and this was a nice bullish candle, right, breaking the previous day low. So our next target is CPR, right, and our stop loss will be the low of this candle. So we will have something like this for a long position. Sorry. See, the low of this candle will be our the low of this candle will be a stop loss. So immediately in the next few candles itself, our stop loss would have hit. So it was not a good day. Multiple stop losses would have hit, but it came in the fag end. But again, we wouldn't be that sure that even at this time this breakout will come. It came in 1 5-minute candle. So the logic worked, but it was not a good day to take a trade, right? So in out of 1, 2, 3, 4, in 4 days that we saw, we got one good entry based on the CPR setup. I'm going to do this back testing until April 1st and just show you how many days we'll get good trades. Now for April 29th, right? April 29th, the previous day high was here, the previous day low was here, and this was a very beautiful day to trade. Why? In the morning itself, we rejected the previous day high, we hit CPR, again we went up. See, even over here when we went up, right, it looked like we are breaking out. This candle looked like we are breaking out of, what do we say, we are breaking out of R1. So now we might hit R2, right, but the follow-up never came. Again, see, when we entered at this candle, say if somebody had entered, see, this was a nice bullish candle and all that. Now we look for R1 breakout, right? So since we entered on this candle, our stop loss will be R1 itself, the R1. So when the price came back and hit R1, we would have just exited, taken our stop loss. See, this was a tricky day, but yeah, that is how market is every day. It won't be a very good day to trade. Like, we won't get a very clean, easy entry. It will be, now we were seeing April 29th, right? See, but the same thing, the moment you see this kind of a move, you come to a 15-minute chart and see, you got a nice, beautiful inverted doji at R1. And after that, this follow-up came. But see, even if we had shorted, our stop loss would have been here, this including this entire wick after this 15-minute candle if we had shorted, right? So even this up move came but didn't sustain, started breaking down, and the best re-entry was back, coming back to the 5-minute chart. The best re-entry was when this candle broke on the downside. This candle broke on the downside with R1 as a stop loss, right? And this is where even the other price action stuff come into play. See, there was a nice break of a trend line also on this candle, right? You had a nice break of this trend line plus R1 breaking down. So we could have entered here. If we had entered here, what we would have chosen our stop loss is R1 itself. If any candle closes above R1, this dotted line is the R1 of CPR. If any candle closes above R1, we would have taken a stop loss. And since we are entering after this candle, right? So we could, in this case, we can enter at 36,600. See, the price at the money is 36,600. You can enter at the money or in the money, but not too much out of the money. So right now we can take 36,600 or probably even 36,700 put, and the targets would have been the previous day high. And even a safer entry was here when on this candle, when the previous day high broke on the downside. See, when I was explaining this logic, I mentioned that if the previous day high breaks on the downside, most likely will hit the CPR, right? So even after this candle, if you had entered, our stop loss would have been the previous day high itself and got a nice dip until CPR. Now where we exit on CPR, that is, comes with practice and one's choice of choosing how much profit they want. Either you're exiting exactly at this pivot, or you're waiting for the bottom CPR, or you're exiting exactly at the CPR. That will come with practice. But the moment we come in the CPR range, we will have to exit. Okay, all my markings have gone. Let me just remark. So I would consider this as a no, not trading day based on the setups that we are discussing. This also no. This was a good setup, so I'm going to mark this one. This was also where a setup worked, but it was not easily tradable. I'm going to mark it 2. This was very easily tradable, so I'm going to mark it like how many days? Sorry. Here also the CPR logic worked, but it was not easily tradable. So I'm going to mark it low. Most likely anybody's, even if I had entered, my stop loss would have hit here. And the second entry we got is the second good trading day based on the CPR was here. So out of 1, 2, 3, 4, 5, we have got 2 days good entries, and these good entries would have given us a lot of profit. The first one, see the fall, 2 entries, and each had a good fall, and even this, the first fall and the second fall would have given us good profit. Now on this day, now I'm on a 15-minute chart just to go a little quicker and cover until April 1st. Now, where were we? Yeah, we were here, right? Now on April 28th, this is the April 28th, the opening candle only rejected the R1, came and hit CPR. If somebody could scalp, well and good. But the best entry was when this R1 broke target R2 of CPR, or 50% of R1 and R2. And see, whenever this type of a breakout candle comes, we will keep our stop loss at R1 itself. If any candle comes back below R1, we will take our stop loss. See, when the candle is so huge, there's no point keeping stop loss over here, right? You can keep, but not an option buying. If somebody has bought futures, they can. If somebody is selling options also, they can. If somebody had sold options, if somebody is an option seller, the moment it started reversing, you started selling options, yeah, you can wait. But when you're buying options, you'll have to keep, you can use the pivots and keep as small stop loss as possible. See, my take on placing stop loss is, you keep a very conservative stop loss and you exit. You take multiple entries, no problem. You pay multiple entries in the sense like 2 or 4 entries, that's it, not more than that. You pay 200 300 more extra brokerage, that is still fine than losing our capital, right? So the moment after this candle, if we had entered, this would have been our stop loss R1 and target R2. This was a beautiful day. So we have got the third day of trading with this logic. This was again a good day. S2 broke, we came and hit S3. See, this dotted line is S1, S2, S3, right? So when S2 broke with S2 as stop loss, we could have traded until S3. This was a good day of trading. See, there was not, on days like this where nothing happens, even after this red candle you enter immediately and your stop loss will be R1. See, on this day, it didn't break previous day high or nothing. Even R1, we were trading above R1. We failed to even go up and hit R2. See, I'll just tell about this and then tell about this breakout of R1. See, again over here, we broke R1. So the next target was CPR, but immediately a stop loss hit, right? Now just imagine if somebody had kept stop loss high of this candle compared to keeping R1, the R1 pivot as stop loss. Here you would have just lost a little bit. Keeping stop loss here, you would have lost a lot in option buying, right? So this was again a no trading day. See, this was a good trading day. I'm on a 15-minute chart, just going a little quicker so I can cover this entire month and show how many days we could have taken nice trade. If somebody has just joined in, please watch the video from starting. It will be there on YouTube. I've covered 4 trading setups on CPR and just explaining now how to take an entry and stop loss and stuff. See, on this day, the moment this, see, the previous day low was here. The moment this S1 broke on the upper side, our target was CPR. So though it was a choppy move in the initial 15-minute, but it was a the moment we retested this S1, right? Let me shift to a 5-minute chart. This was a very good day for trading. See, the moment we went up, came retested after this candle, if we had entered, okay, keeping CPR as target, even this one candle scalp, we could have made money. And rest of the day, see, it was nothing much, only we could have just done scalping, that's it, but not like a very good trade based on the CPR. So since this logic worked from S1 broke and we went until the CPR, I'm going to consider this also as the 5th day where we could have traded. See, after completing until April 1st backtesting, I'll be giving you some more tips. See, there are about 9 to 10 trading setups. Here we are just seeing 4 trading setups. That's all we can cover for now. So I'll be just giving some other tips on CPR. So just stay tuned. This was easy, clean, there's no question at all. The previous day low was here. S1 broke, right? And the previous day low also broke. So we were bound to hit S2. We did hit, but though it was a choppy phase, but still the S2 and S3 hit beautifully. Now just see the beauty of CPR when the CPR levels, right? These levels, I've just taken the formula from Google and I've written the code for this CPR, right, with the help of Google. I have not done anything magic to put this line. So any CPR you take, you will get the same values, right? And see how beautifully the price comes and stops exactly at this S3, like not getting one wick also on the downside. That is the beauty of CPR, which not many will be aware. So this was again a good day. So 6th day of trading. This was just a very good day. This was a very tricky day, but also a very good day where one trade a stop loss would have hit. In this day, I've even taken a loss and then made profit on the upside. How is, see, the previous day high, the previous day high and the R1 was almost at the same level on this day, right? So the moment this inverted hammer came, the small inverted hammer over here, right? Hope everybody can see that. See, the small inverted hammer over here came. I took a short entry, now thinking. See, this was a very narrow CPR, right? So thinking that we might hit CPR, entered here, and my stop loss was R1, but I exited early with very less loss. That is when on this candle itself I exited when this candle was forming. Why? Because we got a nice morning star, a bullish candle with nice follow up towards the R1, and this bullish candle is nothing but this morning star, right? So, and the second candle, when this almost came to this R1 itself, I exited, and then took a trade on the upside. I think on this day, yeah, on this day I traded only after this R2 broke until R3. So this was a very tricky day, but yeah, if we had taken stop loss at the right level, it would have definitely worked. Okay, I just need to mark this quickly again. Or mark this no trading. 1, 2, 3, 4, 5, trading 6, 7, 8. So almost 8 days we have got a nice trade. See, this was nowhere. We opened at CPR, and this was one of the tips that I wanted to tell. See, whenever we are within the CPR or very close to the CPR level, right, most likely the market will be sideways. It will be a no trading day. This is best for option selling. If somebody is into option selling, they can just sell R1, what is R1 and S1 out of the money, R1 and S1, and so they'll make nice money. Whenever we have this white CPR and the price is trading very close to the CPR, I'll show you some more examples as well. See, on this day we got multiple entries, all were good. We rejected R1, hit CPR. Again over here we went up, we rejected R1 and got a nice dip on the downside. And the best part is there was some divergence on the 5-minute chart on this day. Clearly remember, because this was a big day for us. See, on the 5-minute chart, I mentioned about the bearish divergence, right? Price was making a higher high, indicator was making a lower low. This is the bearish divergence that I was mentioning about. But it's not that just because we are making a bearish divergence, we are not entering, right? We need to wait for our CPR level to break. That is, once this R1 broke on the downside, enter with CPR as the target. So this was a very good day. So we had a 9th day of trading. See, again this day we were nowhere. We got a huge gap down. We were nowhere. Some scalping could have done. See, when I say no trading day, using other price action and other things, we can take a trade. But just based on these 4 setups, what I'm explaining, I'm saying no trading day. But yeah, obviously we can sell options or buy futures. Definitely people would have traded this day. See, when along with this, right, when you even go a little more deep into the price action and trade, definitely the small scalps also we can do. So this was a beautiful day, because I clearly remember this was a big profit day for me. Because see, my strong setup is this setup where we reverse from R1 previous day high until CPR. That's when I put a lot of, see, the previous day high was here, R1 was here, we rejected, came and hit CPR. This was a beautiful day. So we have got 10, we are on April 13th. Again here it was a good entry. S1 broke on the upper side and we hit CPR. We rejected R1 and came until the CPR even on this day on April 11th. So I'm going to mark this as 12. See, we opened at CPR, and I mentioned when we open at CPR and trade very close to CPR, we'll just remain sideways. So there was no like a perfect entry that we could have taken. So I'm going to mark this as no. See this, when we look at the chart itself on the CPR setup, we can make out this, right? This S1, the S1 range didn't break on the lower side, and we reversed CPR and we broke even CPR and went higher. So I'm going to mark this as 13. This was definitely a no trading day. See, whenever we get this huge gap down, right, based on the pivots, we won't have a very good trading day. See, again, this is a day where we were within the CPR itself. Obviously, some scalping we could have done, but based on this setup, there was nothing much. So I'm going to mark this as no. This was a clear-cut breakout of R2 and a hit of R3. This was also tradable. I'm going to mark this as 14. And this is April 1st. Days like this, we won't get it a lot of times, but the moment this R1 broke, right, see the kind of move that we had. This was very much tradable. Now, just looking at almost a month and a half, like now we are at May 8th, right? From April 1st to May 8th, the best trades we could have got is about 15 best trades based on this setup. Rest all we could have traded, but not based on this setup, using other things. So this is how you can do some back testing and learn more about CPR and trade on CPR. And now some of the extra tips that I want to give, which has helped me, is, let me get rid of this markings. The first thing is 90% of the times the CPR gets touched one time a day. Like, not very often you will see, now say this is the CPR, right? If we break the CPR and go up, most likely we won't come down and break this again on a normal day. So that's why I'm saying at least 90 to 80% of the time this CPR will get touched at least once in a day. See, you can just like do some back testing, like here itself, right? See, whenever we have touched the CPR and gone up, very few times we have come back again, retested the CPR, right? So that is one thing to remember. And the other thing is, let me hide this price action to explain this. See, CPR, R1, R2, R3, S1, S2, right? If we are above the CPR, most likely it will be a bullish day. See, these are just observations. It's not like just because we are above the CPR, it's 110% bullish, right? No, it is just a kind of perception that we can keep and then decide on our entries. If we are above the CPR, most likely we will be bullish. If we are below the CPR, most likely we will have a bearish day. So these are some perceptions that we can keep in mind. If we have a wide CPR like this, right, most likely it will be a very sideways day. Wherever not within the CPR, it can even be at R1 or S1, anywhere it will be a sideways day. If it is a narrow CPR, most likely we will get a trending day. Okay, so these things are just to build a perception. It's not like 100% sure that it will happen, but we can count on it. And I'm going to be mentioning another setup also. So see, the 4 setups we saw. The other setup is, whenever the price comes close to CPR, right, we have to be careful. It's not necessarily it will break out of CPR. We can even equally reverse from CPR. So we'll have to be ready from that. We'll have to be ready with it, right? Now, if I turn on the price action, you can see many places like this. See, on this day, how the price came, tested the CPR, beautifully reversed from the CPR on the upside, right? days like this where you come take support at the CPR and bounce. So that is one thing, and probably sometime later on I will try and cover the other setups as well. And when it comes to everything that I use, is these are all the topics or the technical analysis that I use. There is some very good setups based on moving averages along with CPR. If we can merge and use it, it is very good, but that's again a very lengthier topic. We'll try and cover it. So if anybody wants access to this particular CPR that I use, right, just in the description there is link for UPSTOX. You can open an account and ping me your trading view ID on Instagram. After opening and trading in the UPSTOX account, I can give you access to this. And if anybody wants to also watch this video, the moving averages with volume along with CPR, you can just open this UPSTOX account and ping me. I can share that video with you. So this is it with all these 4 setups, which will help see with we doing this back testing with this 4 setups, right? Out of this 1.5 month from April to, in April we had 1 or 2 days holidays also, right? From April to May, 15 days we would have got beautiful trades based on this setup. So that's it for now. If anybody has any question regarding the CPR, you can go ahead and ask. Let me just explain, before you put your questions, let me just explain about the entry and stop loss again. See, if the first scenario, if we are expecting a reversal at R1 with the target of CPR and S1, whatever it is, our stop loss will be the R1 itself. Now say price goes up, it is reversing, we keep our stop loss as R1. If the price breaks out of R1 and when we are expecting the hit of R2, our stop loss will be R1 itself. The same thing on the downside. If the price comes here, say we are taking support here and we are reversing back, our stop loss will be S1. In case we break S1 and we are going down, say we are going to hit S2, if we have that view, then our stop loss will be S1 itself of CPR. That is one good way of using it. Now at R1, now for this is for tomorrow CPR, we have R1, S1. So for tomorrow CPR, if we are going to short here, always choose one level above. Let me see if I can open the, wait a minute. See, now over here, if we get a bearish candle for tomorrow and if we are going to short here, right, choose 35,000 or 35,900 or even 35,800, because the price is 34,800. Don't choose 34,700 or 34,600. It is not worth it. The same thing on the downside. Now say we are taking support over here, we are expecting the market to go up. Make sure now the price over here is 34,300. Make sure you choose 34,300 call or 34,200 call, but not 34,400 and 500 call. See, for trading out of the money, you need a lot of experience and a lot of conviction. So it's best to always go in the money. Let me just open the chart that I have for tomorrow. And I have the tomorrow analysis also posted, so you can go and check. Tomorrow is going to be a pretty good day for trading, I think, based on the CPR. See, tomorrow, along with the previous day high and the previous day low, right? This is just I'm explaining for tomorrow. We have a very good at R1 and the previous day high. We also have the price action resistance and the price action support. So these two levels are very important for tomorrow. A break of this, we will see R2 and R3. Probably a break of this, we will see S2 and all the levels marked below. And even if we reverse from here, probably will again hit this level of 60,000. This is Nifty, and the same thing for Banknifty. Both have the pretty similar setup for tomorrow. See, at R1 previous day high, we have price action resistance. At S1 previous day low, we have price action support. A break of this level will definitely take us to R2. A break of this level will definitely take us to S2. And in case we reverse from here, there's a good chance we might come until this previous day low or the S1. So tomorrow might be a good day for trading is what I'm expecting. See, along with all the CPR and everything that we use, right, we also need to have the overall perspective of the market. Now, let me just go to an hourly chart. Now, what is this overall perspective is that will again come with experience and more deeper technical analysis. See, you need to know if the market is in an uptrend or a downtrend so that we can conveniently look for a short or going for a long. See, in a downtrend, if we get any one of these setups, that is, there's reversal setup or the breakout on the downside, it is more convincing to take a trade, right? So always the overall perspective of the market should be there along with our trading and CPR and stuff. See, my view for the market is still bearish until this level. Probably we'll see some bounce after hitting 34,000 is what I'm expecting, because there's a small gap that needs to be filled. Probably we can do that, then get a bounce. And my bearish view in the market will change if this trend line breaks. This green trend line, I'm going to make it blue. If this blue trend line breaks on the upper side, right, then I would be bullish in the market. So that doesn't mean that tomorrow if the market comes to fill this gap, I won't buy call. I will buy call, but I'm just letting you know about the overall perspective of the market. Okay, that's it for today. If I don't know, I'm not sure how many are there viewing it, but if you like this video, please hit the like button, and if anybody has any question, they can go ahead and paste it on the chart. I don't mind taking few questions. Okay, if nobody has no question, we'll go ahead and end this live session. And please use the link that is there below to open an account in UPSTOX, or if anybody wants to open an account, please share the link. And if you do like this video and if you want more videos on this, on setups and different technical analysis, please hit the like button so that I know people like it and I can do more of this. Thank you.